Hey guys, how are you? Let's go over my trades for today. I had one trade and it was a profitable trade, although I didn't like it so much based on where I entered and what happened afterwards. Basically, I failed to manage my risk exactly as I normally do. And honestly, that's one of the biggest problems with traders is that the average trader fails to manage their risk on every single trade they take. That's why a computer is generally a better trader than a human, except that a machine can't pick up on human emotions in markets. That's the thing. So as a discretionary trader, if you are able to understand human nature and human psychology and how we react under certain conditions, a human trader will always have an advantage over a machine, just that the machine is just faster. That being said, let's get to this trade here. I entered Apple. It's in a bearish position at 1025, right on this breakdown here. And generally, as you can see, it wasn't a great entry in hindsight because it got a pop right into it right there. So as soon as I was in the trade, a minute later, I was red. And I said to myself, okay, well, I did fail to manage my risk on the trade. That's one. So I was more red than I wanted to be when it was popping up here at 275. And that's it. But I stayed in the trade because I was a little bit curious as to what was going to happen if we were going to be able to stay above 275 here. Okay. So as you can see, we had this bear break and then it retests like usual. Then we got the sell. This was actually a similar setup to that SPY trade of last week, except that now this is consolidation, kind of looking for a higher low type of thing. Okay, we came up, tested 275. The high of this candle was 275.46, then 275.68, and as you can see, it closed bearish. And there wasn't a lot of buying generally. There was more selling pressure to keep this price below 275. So it kept me slightly confident that these puts were going to be profitable at some point. And I was, in fact, patient. I was just sitting here watching the tape. I was watching the buyers and the sellers. And the buyers didn't look strong because every time they would get a pop, it would get sold right into. And as you can see, it happened again here on even less volume that time. And then it got sold right into, got a bear break, not so much follow through. Another little bit of a flag here, came up right to test the 26 EMA on this 1 minute time frame, and then it started to roll over for good after that. And that's when those puts started to light up. So generally I was not being greedy with these puts, especially since I didn't like the trade to begin with. I didn't like how I failed to manage my risk. So when I have a trade like that, because I've experienced it enough times, I generally am more conservative. I'm not going to be letting this, trying to expect a ton of profit from this trade. I'm going to be getting out pretty quickly. So as you can see here at 1048, right here on, as soon as you started seeing these kinds of breaks here, these huge breaks, I was getting out of these puts. So I sold them I bought them at $2 and I sold the first one at 210. I sold the next one at 215. So a little bit of a profit there, low commissions paid, and that's how it is. So that was the trade. And generally you can see after that, after we rolled here to around 270, you can see that there was getting less and less follow through to the downside. We had 3 inside bars in a row. I don't know if you can see that. And then we started popping up here. And then we look at this. This is absolutely crazy price action. After this, I said, you know what? I'm not going to be trading this market anymore. I just don't like what's going on. There's not enough clarity to be trading this personally. Came up, look at this ginormous pop out of nowhere, gets sold right into, you know? So that's like optimism and then shoving your anyways, look at that. Huge pop into a lower low. That's just like, why are we trading these kinds of markets? And then we get the real pop after that. So maybe too many people jumped on the boat here and the market realized there wasn't enough pressure to keep this going up. So they had to come down, grab some more liquidity, chop around a little more, grab some more liquidity, and then they were ready to grab it up once the trade wasn't as crowded. And that's how markets work, guys. So then you can see here we had the bull move, got a bear break, some consolidation, straight into more bulls, straight bulls there. So that's why, guys, you have to be very strict with your stop losses in these markets. Look, if you're shorting it, you want to be very strict with your stop loss. Look, if you have a trade that's in profit and all of a sudden it's going back to your break even, you better get out, okay? Because this stuff happens quite often where, let's say you're profitable on some puts on Apple, and then all of a sudden you're back to break even, and you say, oh, no worries, I'm going to keep my stop above here. I'll only take a tiny loss on the trade. Before you know it, the thing is back up here, it starts grinding, and now it's putting more pressure on shorts, and it's like a pyramid of pressure in one direction or the other, and then you get squeezed out. So better just take it off near your break-even point than not, okay? That is obviously an arguable topic. So again here, look at this. We're coming up to test our 277.50. Again, we get a bear break straight into bulls buying. So like this kind of price action is notable. There's information we can understand from this. So guys, I'm not trading for the rest of the day here. I'm just watching. And I'm just taking it easy, you know. These markets are crazy. Let the markets settle, and until you see clarity, do not trade. Trade when you see clarity. That's all it is. Act on your edges without hesitation. But if there's no edge, don't act. All right, guys. So that's my trade for today, pretty much on Apple. And yeah, I mean, Nvidia, Facebook, SPY. There was some nice trades to take today, but I don't know. Personally, I have no positions, and I love to keep it that way, all cash, all the time. Maybe one day I'll have some positions, but today I don't. So keep it that way. Start every day with a fresh, clean slate. Thank you, Dan from the Chart Guys. You are my idol in regards to day trading. So have a nice day. Take care. Just on a quick note here, I hope you like my new layout. I'm going to throw myself out the window just for a second. There's my new layout on TWS. Pretty nice. I added another tape here just so I can keep an eye on what the SPY is doing. In the middle, I'm going to put generally whatever chart pattern I think has the most relevance currently in the market. So generally, there's no actual pattern I was watching on the broad market. So I just put the volatility index there. I put the UVXY just to keep an eye on what it was doing, because obviously volatility is through the roof and we want to see what it's doing, you know? So that's it. And as you can see here, I have my main watch list, and on the right side, this is my watch list for my options. So I've linked this watch list to my right side and to my options chain, essentially. So this tape, this ladder, this chart, and the order entry and my options chain are all linked to that side. Everything else is linked to the other side, except for this chart and this, which is the trade activities, which is essentially not linked to anything. All right, guys. So a cool layout, right? TWS, very highly customizable. Highly recommend it. All right, guys. Have a nice day. Ciao.